Market intermediaries play a critical role in the financial ecosystem by facilitating trades, providing liquidity, and managing clients' funds. Understanding the SEC's role in regulating such market intermediaries is what we are going to talk today. With me, Mr. Suneth Perera is here, who is the Assistant Director Supervision of the Securities and Exchange Commission in Sri Lanka. Hi, Suneth.
Hi.
Suneth, can you tell me briefly the categories of these market intermediaries and market institutions that SEC regulates at present?
Yes, the regulatory entities can be broadly divided into two: market intermediaries and market institutions. The market intermediaries, there are 8 categories of market intermediaries: stockbrokers, stock dealers, margin providers, underwriters, credit rating agencies, investment managers, managing companies of CIS schemes, and corporate finance advisors. If I talk about the market institution, there are 3: Colombo Stock Exchange, and the clearing house, and the CDS, that is the depository.
How does the SEC ensure that the market intermediaries operate fairly, transparently, and in the best interest of the investors? What's your take on that?
There are different standards they'll have to maintain.
Okay.
Especially with regard to, if I take granting of a license, it's a 2-stage process.
Okay.
The first one is the in-principle approval. So before we grant the in-principle approval, they will have to show us what type of the human resource requirement they are going to recruit, the IT infrastructure they are going to hire, and mainly we look at the KMPs, the key management persons, what type of people they are going to recruit. So those things we monitor at the initial stage, and then we do an inspection. Once we grant the in-principle approval, then we do an inspection to this particular institution, and then if we are satisfied, then we grant the final approval. But then before we grant the final approval, they have to make sure that all these requirements are in place. That is human resource requirements, IT infrastructure, all that in place before we grant the final.
Right. So could you explain how the SEC supervision of the market intermediaries contributes to preventing these intermediaries from being insolvent and leading to a broad market disruptions?
Yeah, the first thing I'll have to mention here is that the primary objective of the board of directors of the companies and the management is to make sure that their financials are sound. So that is their responsibility. So in addition to that, they will have to submit quarterly financials, monthly financials, and at the end of the year, the financials,
year-end financials.
Yeah. So we closely monitor these institutions. We closely monitor the financial standing of these institutions, and if there's an issue, we talk to the management, we talk to the board of directors, and sometimes we visit the companies.
Okay.
It depends on the
you do the field visits as well?
We'll do the field visits.
Like a surprise visits? Or?
We do that as well.
Okay.
And depending on the severity of the issue, the frequency of the visits are also high.
Okay.
So like that, we make sure that they are financially sound. So in addition to that, we have the governance requirement as well. So they'll have to have a minimum number of board of directors. The composition of the board we have specified. Independent directors we have specified as well. And then the compliance function. We are very keen on the compliance function. So they'll have to have a compliance officer there. We consider them as a key management person.
The compliance officer also been considered as a KMP.
That's right. Yes.
Right.
And the compliance officer will directly report to the board and not to the CEO.
Okay.
So by doing that, we make sure that they maintain the standards, and by doing that, we ensure that they properly conduct their business activities.
If the market intermediaries face financial difficulties, how does SEC step into to ensure the investor protection there?
It's like this. As I mentioned earlier, it's their primary responsibility. But then again, we have a responsibility as well with regard to, especially with regard to the protection of investor relations. We closely monitor the financials. So we do on-site inspections and off-site inspections as well.
Both, yeah.
So off-site inspections, depending on the market category, they'll have to submit financials sometimes monthly, quarterly, half yearly, and yearly. So we monitor the not only the financial standards, all other activities as well. And the compliance officer, they'll have to submit a separate report to us.
Okay.
In addition to their financials. So we monitor all
independent report.
Independent report. So all these reports we closely monitor in addition to our on-site inspections.
Okay.
So on the on-site inspection, we thoroughly check their books and records. And if we find any issue, then we take corrective measures. Sometimes we give them adequate time to rectify their the financial standings or whatever the non-compliances we identify. And depending on if it continues, then sometimes we impose administrative sanctions as well.
Okay.
So that is also possible at the moment.
Depending on the outcomes that you do that.
That's right, yes. And depending on the severity of the issue as well.
Suneth, can you share with us on any recent initiatives done by SEC aimed at enhancing the regulation of these market intermediaries?
Yes, there are a few actually. One is we issued a directive very recently on the composition of the board structure.
Oh, okay.
So the minimum number is they should have minimum of 3 directors.
Okay.
And one is a non-executive director. And then we issued another directive on the CIS schemes, collective investment schemes.
Okay.
Actually, previously it's known as the unit trust,
Yes.
and globally it's known as the mutual funds. So now we here it's CIS, collective
CIS.
investment schemes. For that, we have issued one directive covering several areas like
Okay.
maximum investments they can do, and then the liquidity requirements,
Okay.
the borrowings they can make.
Okay.
So like that, there are several areas we covered in
You
that
cover under that one.
one directive.
Right.
And then we actually issued rules in 2022 covering all these market intermediaries. And now we are enforcing these rules. We have identified certain gaps. So we are in the process of identifying the gaps and taking corrective measures for that. So very soon we will gazette all that.
Okay.
In addition to that, we have developed an internal framework for FNP, fit and propriety of the key management persons.
When you say FNP, could you explain a bit?
That is whether they are fit enough to hold these key positions.
Fit and proper.
Fit and proper. So these key management personnel are basically the CEO of the company, head of finance, head of IT, like that. So
Right.
we want to make sure that they are qualified enough, they are experienced enough to hold these positions. So if they have any issues with regard to the financial state of these individuals, or whether they have any
According to the fit and proper,
framework, yes. Mainly we focus on the fit and proper of these key management persons, where they are fit enough to hold these positions, because these are very responsible positions, as well as very responsible areas they cover. So it's an internal guideline.
Okay.
We'll have to make sure that they disclose everything to us, and if they don't disclose, then we take corrective measures. We sometimes impose penalties on them. Sometimes we can ask them to step down.
So the independent compliance officer is the respective persons to monitor these FNP, or do anyone else monitors these kind of requirements?
The compliance officer is supposed to submit the affidavits to us.
Right. That actually ensures the FNP.
Exactly.
Yeah.
And then we review that, and we cross-check with our internal divisions, especially with regard to investigation, whether they are
Okay.
in the. So if we feel that they are not fit enough, then we take actions. The next initiative is that we have issued another directive on the minimum financial requirements for market intermediaries. We had one, but very recently we issued another directive, because corporate finance advisor is a new category that we are licensing at the moment. And previously they didn't have a minimum capital requirements. Now
Right.
they'll have to maintain 7.5 million
Okay.
capital requirement. So like that, for each category of our license intermediaries, there is a minimum capital requirements. They'll have to maintain that. Yes.
Okay, as a final question, is there a way for an investor to reach out to SEC should they have any concerns or complaints? Maybe the way the broker's behaving on their investment, or any queries. Independently, can they reach out to you? If they can, what's the way?
They can, certainly they can. If the complaint is related to a stockbroker, then there's a separate mechanism. They will have to complain to the compliance officer of that particular stockbroking company.
Okay.
And then they'll have to come to the CSC. If that is not resolved, then
Okay.
it comes to CSC. then they will apply to or complain to the mediation panel. The next stage is the dispute resolution panel, and still they are not comfortable or unhappy with that, they can come to the SEC. That is with regard to the stockbrokers. Okay. But for any other market intermediary, they can directly come to the SEC and make any complaint. So we look into all that and take corrective measures, and we will do our best to resolve whatever the issues they have.
Thank you, Suneth. Thank you for giving us the information about the market intermediaries. Thank you all for joining with us, and stay tuned for more updates.